Good afternoon, everyone, and thank you for joining us today to discuss Prevest Denpro financial performance for the Q3 and 9 months of FY24. I'm delighted to share with you the highlights of our achievements and the strategic moves we have made in the face of challenging marketing conditions. Our company has experienced an increase in its top line, marking a growth of 11.72% compared to the 9 months of the previous year. Despite significant expenditures in research and development, manpower and marketing, we have been able to enhance our profit by 8.09%. While our export business has encountered challenges due to foreign exchange crisis in some of our major exporting countries, I am pleased to inform you that we have successfully navigated these difficulties. We have expanded our export footprint into new territories such as Venezuela, Senegal, Mauritius, and more. We remain optimistic that the situation stabilizes. Our export business will witness significant growth in the coming months. On the domestic front, our business has experienced rapid growth thanks to the diligent efforts of our marketing team. This growth has contributed significantly to our increased top line, and I'm confident that our domestic operations will continue to flourish in the future. One of the highlights of this quarter is the successful launch of our new product line under the brand Oradox. The overwhelming response from our distributors, customers, and stakeholders worldwide indicates a promising future for this brand, which will undoubtedly boost our top-line growth in the coming months. Additionally, our venture into the disinfectant segment is progressing well. With our products in the pre-launch phase, we are currently conducting product evaluations and clinical trials in various institutions to validate the product quality. We anticipate that this segment will contribute significantly to our top line in the coming period. Now let me share some insights into the dental industry landscape. The global oral care market in terms of revenue is estimated to be worth $47.2 billion and is poised to reach to $54.9 billion in 2026, growing at a CAGR of 3.1% from 2021 to 2026. Whereas the India's oral care market is expected to grow at a CAGR of 9.2% from 2022 to 2029-30, reaching $1,295 million by 2030. The market is segmented by toothpaste, mouthwashes, and other oral hygiene products. The growing awareness of oral hygiene and dental health is driving demand for oral care products in India. The increasing urbanization of India, with a per capita income increasing from $1,617 in 2010 to $2,020 in 2020, is also driving demand for premium oral care products. The dental 3D printing global market is estimated to be worth $2.9 billion in 2023 and is expected to grow at an annualized growth rate of 15.1% from the year 2023 to 2035. In Indian dental 3D printing material market is expected to reach 9.88 million by 2033. This market is driven by the increasing prevalence of dental diseases and demand for high-quality dental products. 3D printing offers more treatment choice cost effectiveness, and customization options for the patients and clinicians. The global antiseptic and disinfectant market is estimated at $35 billion in 2021 and is anticipated to reach around $63 billion by 2030, growing at a CAGR of roughly 10% between 22 and 2030. We are fully ready to enter these growing segments of dental industry and see a bright future for our company in terms of business growth. We continue to face headwinds from the currency exchange fluctuation, shortage of foreign exchange in some of our major markets. However, I'm happy to share that these challenges are gradually easing and we anticipate renewed business growth in these regions in the coming period. Rest assured, we remain deeply committed to maximizing value for all our stakeholders. We are taking every possible step to enhance operational efficiency, drive profitable growth, and create long-term shareholder value. We are confident in our future prospects and remain committed to our strategic priorities, such as expanding our product portfolio and market reach, investing in innovation and R&D to drive future growth, strengthening our operational efficiency and cost management, enhancing our brand presence and customer relationships. We believe that by staying focused on these priorities, we will continue to deliver sustainable value for our stakeholders and achieve our long-term vision. Thank you so much. And now Mrs. Namrata Modi will share financial performance for the 9 months of financial year 24. Over to Mrs. Namrata.
Thank you, Mr. Modi. Good afternoon, everyone. Thank you for joining us today to discuss Prevest Denpro Ltd financial results for the 9 months of the fiscal year 2024. I am pleased to share with you that our company has shown growth with the top line increasing by 11.72% from 3,778 lakhs to 4,221 lakhs compared to the 9 months of the previous year. Moreover, our profit after tax has experienced a growth of 8.09% during the same period. Our EBITDA for the 9 months of the financial year 2024 stands at 1,597 lakhs with a 1.75% increase from 1,569 lakhs for the same period last year. However, as we navigate through this phase of growth, it is essential to note that our profit margin and EBITDA margin have shown a marginal decrease. This can be attributed to the strategic investment made in launching and promoting our new product range, Oradoc. Additionally, our participation in both domestic and international dental exhibitions has incurred promotional expenses, aiming to enhance the visibility of our brand. Furthermore, we are actively expanding our team across various departments for existing facilities and as well as new facilities, including sales and marketing, research and development, and departments. These strategic hires will ensure that we have the necessary expertise to drive our business forward. In our commitment to self-reliance and cost effectiveness, we are actively working to reduce our dependence on imported raw materials. Our in-house research and development initiatives are geared towards achieving this objective, allowing us to break free from our reliance on imported products in the long run. I want to assure our investors that we are diligently working towards cost-effective measures and optimal resource utilization. Although there has been a marginal decrease in our margins due to our recent expansion and growth, we believe this investment will give substantial return in the long run. As we look ahead, we are confident that our focused approach to cost-effective practices and diligent resource management will result in improved margins in the coming periods. We remain committed to maintaining the highest standard of quality while exploring avenues for substantial growth. Thank you for your continued trust and support in Prevest Denpro Ltd. We are excited about the future and look forward to sharing our continued success with all our stakeholders. Thank you. Now over to Mr. Vaibhav.
Thank you, ma'am. And good afternoon, everyone. And thank you for joining us today for this investor call. I am pleased to share some exciting developments that have taken place recently at Prevest Denpro Ltd. Firstly, I am thrilled to announce the successful launch of our new oral care brand, Oradox. This consumer range of products represent a significant growth opportunity for Prevest Denpro Ltd, and we are highly optimistic about its potential in the market. The initial phase has yielded an encouraging response from various quarters. We have devised a comprehensive strategy for the launch of Oradox, covering both online and offline channels. We have already secured partnership with 3 of the biggest online portals, and our Oradox range of products are now available on Tata 1mg, Amazon, and Flipkart, in addition to our own portal. Further tie-ups are in progress as we aim to expand our presence across multiple platforms. In line with our commitment to innovation and customer outreach, we have taken a bold step by launching our own e-commerce channel, Prevest Direct, recently. This move has allowed us to engage with our customers directly and has already yielded promising results. Our team is actively promoting our brand through this platform, and the initial response has exceeded our expectations, indicating rapid expansion potential, especially in our underdeveloped markets. While it's early days for both our online ventures, but we are confident in their scalability based on the initial response. Simultaneously, we have commenced offline distribution of Oradox, enrolling our dental channel partners in all key markets to leverage our expertise in reaching dentists nationwide. To support the successful promotion of Oradox, we have initiated a strategic hiring process to add more talented individuals to our team to join our sales team across the nation. These individuals will play a crucial role in promoting Oradox and our existing range of products, ensuring its widespread recognition. I am pleased to inform you that we are on track to complete this hiring process within the next 2 months. I am pleased to report that our domestic business is performing exceptionally well, and we anticipate further growth in the coming period. The positive momentum from the launch of Oradox and the strategic initiatives we have undertaken have positioned us well for continued success in the market. In conclusion, I would like to express my gratitude to our dedicated team, whose hard work and commitment have been instrumental in achieving these positive results. We are confident in our ability to capitalize on the opportunities before us, and we remain focused on delivering value to all our investors. Thank you once again.
Thank you. So should we open for question and answer?
Yes, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Venkatesh from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Mr. Modi, can you please share in the first 9 months of the year, what is how much of your revenues is coming from India and how much is coming from exports, and how much has the India revenues grown YOY and how much has the export revenues grown YOY? That's the first question.
Thank you very much. The export revenue has not grown in this financial year. In the 9 months of this financial year, it is flat. So we have been able to maintain the same level. But our domestic revenue has grown by 35%. So the split between domestic and export is 60-40. 60% is the export component and 40% is the domestic. So the reason for not performing well in the export market is attributed to the financial crisis in many countries, which has, impacted the, export performance. But we have been able to maintain the same level, by finding out new avenues, new opportunities, other countries. So we have been able to maintain the same level as it was in the last financial year.
Okay. Now, when you talk about financial crisis in many countries, what financial crisis are you talking about?
See, the crisis is basically the non-availability of the foreign exchange with the government. There is no problem with the demand. There is no problem with our customers. They have plenty of funds. But the government in these countries do not have the foreign exchange remittance. They cannot remit the foreign exchange because they have foreign exchange deficit. So that's why the business is not growing in these countries. So they're just surviving with the minimum requirement.
Okay.
So
which countries are you talking about? Where there is this? Which countries are you talking about?
We are talking about the major exporting countries where we were having the best of the business coming. That is, Egypt is one of the major countries. Peru is another country in South America. Basically, the problem is in African and some of the South American countries like Peru, Argentina. And in Africa, we are facing problems from Sudan and Egypt. So these are the 4 countries which were our major exporting countries. Because of the foreign exchange crisis and, currency situation, they have not been able to give us sufficient orders. But we have recently met all of them in one exhibition which was held in Dubai. So everybody is very positive and very optimistic about the future. And the situation is definitely improving, and we are very confident in the coming time the business will definitely grow in these countries. These are very high potential countries where we can do extremely good because the popularity of our product is very, very good in these countries.
See, the reason I'm asking you this is I remember after your fourth quarter FY23 results, I had asked you what kind of growth you can do in the current year and what kind of margins you can do in the current year. And you had communicated that if you go back in your transcripts and see, you will clearly see that you were expecting 30% revenue growth this year and you were expecting margin similar to last year of 40%. Now, obviously, I can understand the domestic part is doing quite well. In 9 months, it has done 35% growth is what you're telling me. But the export business is suffering. Now, and also, I think call before that, you had even said that in next 4 or 5 years, we can even triple our revenues was the number which you had mentioned. Because you are a tiny company, you can definitely grow at those kind of levels. Now, given this new scenario, do you think you can develop for example, the North American market more better and maybe the European market better to get back to 30-40% kind of growth levels next year? Or we will continue to be dependent on geographies like South America and Africa where there is a foreign exchange problem which might persist. It's not necessary it will get solved next year. So any views on that?
Definitely, we have, explored new countries and our business in USA has increased from 8.8% to now it is 2.44%. So we see a lot of opportunities in the US market, and we have also explored new countries where there is a potential so that, we can grow in these countries to compensate for our business, loss in the 4 countries, which we have just mentioned. So we are also very conscious of the situation, and we are trying our level best to increase our business in the countries where we were not earlier existing. And now we have added new countries from where we have received sufficient and very good orders. That is why, in spite of the shortfall from the business in the 4 major countries, we have been able to maintain the same level by exporting to other countries. So the business in other countries is growing, but because the business has dropped in these 4 countries, so there's no net gain. But once the business in these countries also grows, the overall business will grow. Definitely it will grow because we are very positive and we are very confident that this is not a permanent situation. The situation will definitely improve. And once the situation improves, the business will grow in these 4 major countries and as well as the countries where now we are making all-out efforts to grow. So we are very confident that the situation will change and the business will grow in the export market in the coming time.
Okay, understood. One last question from my side. Last couple of years, you have increased your capacity also. Is it possible to share what kind of capacity utilization levels you are operating at currently?
Currently, we are operating at 40% of our existing capacity because, after capacity utilization expansion, now we are operating at 40% of our capacity.
Okay. And utilization can go up till 90%. Is it not? I hope there is no such thing that, there's like a technical issue. You can't, even if you put up a plant, you can't go up above 80% or something like that.
No, we still have sufficient capacity. We still have sufficient capacity, and this capacity is currently based on single shift basis. But there is always the possibility of going for a second shift if there is a market demand. But still, we are operating at 40%. There is a huge capacity available for the business growth.
Okay. Understood. Thank you. All the very best for the future. Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Manan Shah from Electrum PMS. Please go ahead.
Hi, sir. Am I audible?
Yes, please.
Yes. Hi. Thanks for the opportunity. So my first question was regarding our current dealer network. What is the number of dealer network and how are you planning to grow it?
Currently in the domestic market, we have 60 plus dealers, and in the export market, we have around 90 dealers. So we are, there are still many countries where we do not have any representation. So we are finding out new dealers in those countries where at present we do not have any dealers. So that process is going on. In the domestic market also, we are adding more dealers in those cities currently which are not, served by our existing dealers. So this process will continue. Appointment of the new dealers in the domestic market as well as in the export market. So that is a continuous process. So we are trying to find out new dealers whenever and wherever there is a requirement.
Okay. My next question is, currently we are having around 3% of domestic market share. So do we see ourselves having 10 to 20% of market share in 4 to 5 years down the line?
Definitely, we are making all-out efforts to increase our market share in the domestic market. So we see that there is a very good opportunity for us to grow to this level. We will make all efforts to reach to this level as early as possible.
Sir, I'm Manan's colleague. Just wanted to add here, like we have about 20 crore odd sales in the domestic market. I think what we have done our channel checks, there is a lot of competition from Chinese imports. So just wanted to understand because you are trying to grow globally.
Sorry to interrupt, sir. May I request you to use your handset, sir? It's echoing slightly, sir.
Yeah, is it better?
Yes, sir. Thank you. Please go ahead.
Sir, just wanted to understand that, the domestic market itself is big enough and your total sales in the domestic market is only about 20 odd crores. So what are the exact efforts you are taking that this market itself becomes bigger and which also will help us save from the slowdown in the global markets? And the second, we have got from our channel checks to the doctors, we have heard that there is a lot of one push-based selling which happens in these products especially from the dealer network? And second, there is a lot of competition from Chinese imports. So if you can just cover these things, it would help.
It is evident from our results that we have a growth of 35% in the domestic market, which is a phenomenal growth. We are very happy with this kind of growth in the 9 months, and we are very confident that this growth will continue further with the efforts of our marketing team and with the high quality of products which we are manufacturing in our factory. As far as the competition from China is concerned, we do not consider Chinese products as our competitors because the Chinese products are not of very good quality. They are definitely very cheap, but the dentists do not, prefer to use the cheap quality non-standard products for the dental treatment because these dental treatment is a health-related treatment, so dentists will not like to use substandard and the products which are cheap and not of high quality. So the Chinese products are definitely existing in the market everywhere, not only for the dental products. For every product, there are Chinese competition. But for us, we do not consider Chinese products as our competition. We have a competition mainly from the multinational companies who have a very high brand value. So we consider them as our competitors, not the Chinese companies as our competitors.
Okay. And what are we planning?
Sir, maybe request you to rejoin the queue as there are several
I'll join
participants waiting for their turn. Thank you. The next question is from the line of Parv Jain from Niveshaay Investment Advisory. Please go ahead.
Hello, sir. Thanks for the opportunity. Sir, my first question would be on domestic side. So, what we broadly understand is that government recently introduced these MDR regulations, which have been helping the domestic producers to increase their share in the overall pie. Sir, can you throw some light on how helpful it has been and how it can help us grow our market further, especially the domestic market, and especially considering my last participant also mentioned that there is immense potential in Indian market itself. So can you throw some light there?
I will request Mr. Vaibhav Munjal to answer this question.
Sure. So, sir, to answer your question, in the recent regulations, yes, there have been some regulations which have been changed by the government, which have helped, which have been a sort of, I won't say, it has not stopped the other companies, but there have been a hindrance for other companies to come into India. But now, if you look at it, most of those issues are sorted, and almost all the MNC companies have their certifications in place. So what we are, as Mr. Modi rightly pointed out, that we are looking at fighting this competition head-on with our best quality products and improving our range to the most of the markets. So those are the two key things which we are working on for the growth in Indian market. Second important thing, in fact, in the earlier question also it was asked, I would just like to add, for the growth in domestic market, we are not even looking at stopping at one location, right? We are looking at growth from our existing set of products, exploring newer markets, and pitching in new products to the markets where we are not reaching. And that is where our online foray and our new team member additions have come in play. Parallelly, we are also in the domestic market. We are also to improve our turnover in domestic market. We are also looking at the new range of products. For example, Oradox. Oradox within India, both in online and offline, throws a big opportunity for us. So that will, in the coming few months, it will keep on adding to our overall turnover, and overall pie of the business will keep on increasing. So that is the plan going forward for the domestic market.
Okay, sir, that helps. So my second question would be on this other expenses side. So broadly, if you look at your gross margins, they have increased on a year-on-year basis. But what we see is that the particular share of employee benefit and other expenses has offset the increase, and instead it has led to reduced EBITDA levels. So if you can help me understand the broad split of other expenses as well as the employee benefit expense. I mean, in terms of other expenses, you can give us like the broad categories, legal and professional and domestic marketing and sales. And in the employee benefit, if you can give the number of employees, how they have increased, vis-a-vis what is the percentage increase in the remuneration of existing employees. That will help, sir.
Mr. Vinay Jamwal will reply to this question.
Good evening, everyone. Reply to your first query is with respect to our increase in expenditures. First of all, our cost of raw material is consistent. It has basically improved a little bit as compared to preceding corresponding period. And as far as the employees benefit cost is concerned, we have our company has joined by a very good marketing team led by Mr. Weber Munjal. And this is one addition. And with respect to marketing, other people have also joined. We have increased our employees from say 100 to 141. And mostly this increase is with respect to marketing team. This is one thing that has led to the increase in employee benefit cost. And in addition to this cost, we have an increase in other expenditure. Like there is an increase in acquisition expenses since we are exploring new markets world over. So we are going for as many as possible number of exhibitions. This is also led to an increase in our other expenditures. In addition to this, we have got the consultancy fee which has increased say at least two to three times in this current year since we have got a US FDA. And in addition to this, we have there is an increase in recent subscription from say which led to an increase of from 6.52 lakh to 25.20 lakh. These are all expenditures which has led to a little decrease in our EBITDA margin and EBIT. But what the management feels that with this expenditure, the company is going to accrue a lot more sales revenue in the coming quarter, maybe in the current quarter and in the succeeding future period also.
Thank you. Mr. Jain, may we request you to rejoin the question queue for follow-up questions. Our next question is from the line of Avinash Nahata from Parami Financial Services. Please go ahead.
Hi, can you hear me?
Yes, sir. Please
Yes,
go ahead.
please.
So I have a few questions. I'll tell them one by one. You may choose to answer the way you want it. So somebody in the call mentioned that we have a market share of some 3-odd%, which means at 55 crores, the total share is something around 1,600 crores. So one question is, how are the first 5 players distributed? So the players like you, the top 5 players, how they are distributed. Second is, you also mentioned that on a one-shift basis, you're doing currently 40%. So does this mean if we are doing 100 rupees of business, we can do 400 rupees of business without putting any incremental new investment on a 2-shift basis at 80% capacity utilization? That's number 2. And how much capex we have done in the ortho endo space, composites, whatever is the material where we work in the current financial year, and what are the products you would want to add over the next 3-4 years? That's it from my side.
No, first of all, I will like to reply to your query regarding the capacity utilization. We have a capacity utilization of 40% on single shift basis. So we can go up to 90% capacity utilization on single shift basis, and beyond that, we can go for further capacity utilization by the second shift, introducing another shift. So we have enough capacity for the next 5 years. So we can easily meet the market requirements for the next 5 years.
Understood.
Now, your first, So your other question is the capex. Now we have already invested 24 CR on the capital expenditure for the setting up of the new facility and also for the setting up of the research center. So this capex will definitely will be useful in the production of the new products in diversification as well as for the new production activity. And the R&D, CapEx and R&D will help us in the development of the new products, which are already we have taken up. So with the new product development and the new manufacturing facility, we have sufficient capacity for next 5 years and sufficient products for marketing in the next 4 to 5 years. So definitely we are continuing our, research activities so that we can add some more biomaterial products, and also, as maybe you know, that we are developing bone grafting materials. We are also developing oral wound dressing. So there are many products which are under development, and our R&D is working on the development of these products. And once these products are fully developed, and we will take up for commercial production.
And the last one on this market share thing, guys like you, top 5 people would contribute how much out of the 1,600 crores?
See, we are the top 5 companies who are the maximum market share are all multinational companies. Our number 1 is Dent Supply, number 2 is GC, 2G is a Japanese company, Cold Team, and then Iowa Class. These are all 7 companies who are dominating the market in India. So we, being an Indian company, we come after them. They all are above us, and they have got the maximum market share.
So there's a follow-up. So within the Indian manufacturers, you have the highest market share?
We have the highest market share among the Indian manufacturers.
Okay. Thanks a lot.
Thank you.
So just to add to, within India, we are the biggest player, by any means that we are. In terms of turnovers or market share perspective, we are bigger than any of the other players.
Thank you. The next question is from the line of Elizabeth Pereira from 7 Stars Investment Services. Please go ahead.
Yeah, thank you for the opportunity. I just had a question with regards to our domestic sales. So I just wanted to know whether you'll have a breakup of where the sales have been mostly, like whether it's from the dealers in the tier 1, 2 cities or from the tier 3 and 4 cities.
Mr. Vaibhav, please reply to this question.
So your question, yes, sir. Your question is regarding dealer sale contribution or the growth contribution?
Yeah. So from our domestic sales that we have done, the growth seen, so has the growth been more from the dealers in the tier 1 and 2 cities or from the smaller towns?
So the growth has been spread, sir. The contribution is obviously higher in the tier 1, 2 cities. Okay, if we talk about the overall sale contribution, but the growth has been led by the rural markets. With rural, I won't say rural, but tier 3 and tier 4 cities. To be this thing. But parallelly, the tier 1 cities also have done decently well. So difference would not be very high between both the markets that way.
Okay. The reason I asked this question was because usually in tier 1 and 2 cities, we'll have like dentists who are they have a higher preference towards the international brands. So if we shift our focus towards the tier 3 and 4 cities in a bigger way, so I'm sure that can help us.
Yes, actually that is what we are doing. If you would have noticed, I just mentioned in my speech, we have started our e-commerce platform also with the delivery across pan India. And we just started it. That's a first step in terms of increasing our reach to the markets that even we are not there. First is that. Second, we are also adding dealers in the smaller markets. That is there. But having said that, sir, tier 1 markets still are a big pie of the business. So we are not leaving that turn. The proposition which we are playing with our products are the best value for money products, right? Our products have the best certifications. Our products are certified by all global standards, and we offer a price competitive advantage over any of the MNCs. So we are making headway in those markets also. So both those, we are not leaving either of the front unturned. We are working on we are not leaving tier 1 and parallelly expanding our reach in the tier 2 and tier 3 cities.
Okay. And my second question is with regards to the main board listing, because somewhere during the IPO, Mr. Atul had mentioned in an interview that in 2 years he'll be planning for the migration to the main board. So any update on that?
Yes, we are planning for the next financial year.
Okay. So it will be in the next financial. Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. Hope I'm audible.
Yes, sir. May we request you to use your handset, sir?
Yeah, just second. Hello. Is this better?
Yes, sir. Please go ahead.
Yeah. So, sir, just wanted to now get maybe a broad sense, like you've explained very in depth, what all problems in the export markets are we facing. So maybe like if we can say FY24, we faced all the problems that we're supposed to face. What about FY25? How do we look at it? Will our exports fire at the clip that we want them to? Will we be able to do the previous, like what our target was 30% revenue growth and 40% margins? Will that be able to be done in FY25? Or what kind of guidance for revenue and margins do we have for FY25?
See, as far as we understand from the meetings we had with our distributors in these countries where there is a foreign exchange crisis, we understand and we feel that the situation will definitely improve in the next financial year. We are seeing good signs in this quarter that some orders from these countries have already started coming. And we are confident that the situation will definitely improve in these countries. This foreign exchange crisis will be over. It will ease. And we will have, good orders from these countries because our products are very well established in these countries. But we are not solely dependent on these countries. We are making efforts to grow our business in other countries. And we have also started, our business in the USA has increased to around about 2.5%. And we are making more efforts to grow our business in USA because our products are now becoming very popular in US. So we are very confident that we will grow better in the US market in the next financial year. There are some other countries where we have started making efforts to introduce our products. So our business will definitely grow in these new countries like, we have started, selling in Australia also this year, and Venezuela is another country. Some more countries we have added. And, Saudi Arabia, we have done extremely well in this financial year. We are very confident in the next financial year we'll have much better business from these countries. So that we are very confident, that with all of our efforts for the growth in the export market, we'll come back and we will have, growth in the export business also in the next financial year.
Yeah, so would you like to quantify that? Because even if our domestic market grows at 50% and we have 40% share from that, so even can we at least grow at a minimum of 20%? Would that be a fair assumption? Like even
that's the minimum. That's the minimum we are considering that at least there should be a growth of 20% in the export market in the next financial year. That's the minimum target we have set for ourselves. And we are working on that, and we are confident that we can achieve that growth.
So that's for export market. And what about our
That's for the export. Indian market is going. The Indian market has already shown very positive and very good growth in this financial year in the 9 months. And this momentum will continue because the new products have been just launched. They will definitely add to the revenue, and definitely in the Indian market, our business will be much faster growth in the next financial year.
Okay. Thank you.
Sir, if I may add something to this. Sir, in the exports, if you look at it, all these markets are our strong markets, as Mr. Modi rightly pointed out. And it's just a matter of a pent-up demand which will actually come in the moment these restrictions of dollar ease up. So it's a matter of any time that if what we have seen is that once a country opens, it gives us a pent-up demand, and they will open up one by one or they will open up together. That's the only question. And the moment it is there, we expect a huge pent-up demand coming in from that quarter also for our export business. And parallelly, we are adding another lot of new countries also, and that will actually end up taking our export business to the next level also in terms of that.
Thank you. The next question is from the line of Pritesh from Lucky Investment. Please go ahead.
Yeah, sir. Just a few questions. One, on the Prevest Direct site, there are these products under dental material, which are fairly exhaustive list. So these are all traded products for us?
These are all manufactured
products.
So what we see on the site under oral care, 3D resins and dental material, all are manufactured by you?
Yes. So as of now, there is no product we are trading. All the products that are there on that product are manufactured by us.
So I fail to understand one thing, sir. We are a 50 crore revenue company. We have so many products and we have so many countries that we talk about. There will be some Pareto principle, right?
Yes. Yes, there is.
Yeah. So, what is that Pareto principle? In sense, what are your top 2 export markets and contribution to your revenue, and what are your top 5 products and contribution to your revenue?
See, the Pareto principle of 80-20 applies actually it applies across everything. So in our case, it's actually not 80-20, it's slightly lesser than that. Top 5 products would contribute to approximately, not top 5, but around top 20 products would contribute to around 40% of our business. That's something like that.
Okay. And export market?
Export market, again, see, sir, in exports...
Top 2 or 3 countries, right, where you will be...
Actually, no, we are spread across the markets. It's not the top 3. If it was top 3, then the business which is happening right now also would have this thing. Our business is spread across. And in the last call, we have given up a split of the global percentage split also, if I remember correctly.
So then,
in terms of which market contributes to how much percentage of our business in exports.
Okay.
Yes.
So then, so as a strategy, slightly longer term,
yes.
It's a smaller company with limited resources and limited bandwidth. Isn't it, more beneficial to focus your energies on, let's say, few continents, let's say Latin America and Africa, where the larger population is there and we do not have maybe MNCs competing there, create that type of a business in export instead of going around and having so many countries and, so many small, insignificant businesses. Do you see it that way? Or the dental business is done the way you are doing today?
I will reply to this question. Actually, our major revenue comes from 20 countries. And rest of the, 70 countries are just contributing a very small portion, but we don't want to lose any business from anywhere because the countries which are, giving us less business today, they have the potential to grow. But we can't leave those countries, if there is a demand for our products in these countries, even small demand, so we are catering to these countries. But our major contribution in the revenue is from the 20 countries, So we are focusing on those 20 countries. Rest of the countries, they come on their own, they join us, they give orders, they become dealers, we supply them. And this is how we are catering to 90 countries. And they are also contributing to our revenue. So we don't want to lose them and we don't want to not to do business with them. So we'll continue our policy of providing supplies to all countries where there is a potential, where there is a requirement, where there is a dealer. But definitely we'll focus on the developed countries and the countries where we foresee a better and bright future for our products.
And here the business would be done based on the registrations you would have done in those country, and you appointed a dealer or a distributor and who will go ahead and sell the products in that country, right?
That's our policy. We appoint a dealer. The dealer registers the products in this country, and then he continues to buy from us with the understanding that he will continue to grow and give us at least 20% growth every year. And in most of the cases, they are fulfilling their commitments, obligations of growth. But as I said that the major 20 countries, out of the 20 countries, 4 countries which were contributing maximum for our business have, foreign exchange crisis. So that's why the business from export business has not grown. But if those countries were also performing in the way they were doing earlier, we could have also seen the growth in the export in this financial year. But now we see that the situation is changing, and we are sure that they will come back and the foreign exchange crisis will be eased and will become normal, and we will get good business from these 4 countries. So this is our present strategy, and I think most of the dental companies are following the same strategy.
Do you have to register your products in these countries, sir?
Yes.
Okay.
We have to register because all these countries, being health-related products, every country has got its own regulations, and we have to comply with the registration process with all these in these countries.
Okay. And my last question is, sir.
Mr. Pritesh?
Oradox.
So we are unable to hear you, sir. Your audio was lost, sir.
Hello. Yeah. Can you hear me?
Yes, sir. Please go ahead.
Okay. So on the Oradox side, which is the OTC side of the product where you have done your launches this year, I see those products in some of these web portals, apps and all. What is the right to win for you in this OTC line? You're going to compete against some of the products are fairly new to the customer themselves, and what is the right to win there? How will you generate business in this Oradox line of business?
Okay. Mr. Vaibhav, please answer this query.
So, sir, Oradox, if you would have seen the products and you would have seen it on various platforms, these products when we are looking at these products are very innovative, and most of them are first in India. Okay, and many of them are currently not available in India, these kind of products, and hence the direct competition to the bigger players in this market, be a Colgate or a Listerine, doesn't exist because these are very specialized products. Secondly, I already mentioned that when we are looking at launching this, an online consumer part is already there. The entire piece of the digital marketing and the entire piece of the performance marketing, that entire thing is already, we are working on that, and it will start from its own business. Second, from an offline point of view, we will engage with our dentist channel partners who are already, we have a huge reach to these dentists. Through our team, through our dealer network in India, which we have 60% dealer networks there, and we are already reaching to them. And third, the dental exhibitions and everything already will provide us another opportunity to launch this to dentists. So these are the 3 ways we are looking at moving this to the end consumer, these products.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I would now like to hand the conference over to Ms. Astha Jain, Senior Research Analyst from M Securities, for closing comments.
Thank you, Zico. On behalf of M Securities Limited, I thank Prevest Denpro Ltd team for giving the time we spent on this call and responding all the queries in the detailed way. I would also like to thank all the participants for joining this call. Now, I would like to hand it over to moderator again for the closing remarks.
Thank you. Ladies and gentlemen, on behalf of M Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.